Hey, what's going on, everybody? Welcome to another episode of the Path to Profit podcast. If you're joining me for the first time, my name is Bobby, and as we do every single week, we're breaking down everything that went on the market this week to get you ready to trade for next week. Seems to be a lot of concern with a lot of people with the pullback that we've had, so we're going to be going right into the information. This way we can see what is truly going on. So without further ado, it's time for the rapid review. All right, so if you're looking for the agenda, down in the description, as well as timestamps if you want to jump around. And make sure you stay tuned till the end where I give my 0 through 10 rating on the market so you can see where I think this market might be going. So let's get started with the current state of the market. Market direction, we are in a confirmed uptrend. We've been that way now for 6 weeks. We are 30 trading days in an uptrend. Just to clarify, that's not calendar days, that's trading days. And in terms of distribution, we started off the week with 2 distribution days on the S&P, 1 distribution day on the NASDAQ. And then on Thursday, we gained a distribution day on both those indexes, down on volume, resulting in a finish of the week of 3 distribution days on the S&P and 2 distribution days on the NASDAQ. And with that being said, we'll take a look at our distribution day tracker, taking a look to see when these occurred and how long do these possibly fall off. And as you can see, for price movement, looking at the percentage off of the close, if we get 5% above the close, we lose that distribution day. So we got a ways to go on all the distribution days. And in terms of trading days, we also have a ways to go too. So look, just we're going to keep an eye on this and see if we can hold up long enough where these start to fall off and lose some of the clustering. But overall, 3 and 2, not too concerning in my eyes. Looking at the moving averages, so last week we dropped below the 10-day simple moving average. This week, the only major change was the Dow broke below its 21-day exponential moving average. You can see the S&P getting right at its and closing at its 21, and the NASDAQ just holding above its 21 as well. And other than that, everything else pretty much very similar to last week. For this week, though, the S&P was down 0.28%, NASDAQ was up 0.59%, and the Dow was down 0.13%, which leaves us for 2023, the S&P up 6.24%, NASDAQ up 12.62%, reading out the year, and the Dow up 2.05%. So, yeah, one of those weeks where it definitely seemed like we had a big move up and then dropped down pretty quickly. But you could see as the week ended, the actual price movement compared to last week was not that big. But to take a better look at that, let's jump over to Thinkorswim. And let's start off, as we always do, taking a look at the NASDAQ on the daily chart. So let's zoom in, get a little bit better of a look. And you can see exactly what I was talking about, where we have this kind of rally, which looked like this mild pullback and then little rally in the beginning of the week that we were going to maybe break to continue higher. Then Thursday, that distribution day comes in. And then Friday, we close down even lower, hitting that 21-day. Finding support there, and then finishing out the day towards highs. So we're still in this pullback from this last longer term rally. Now the question is this really truly going to be an area where we find support, and can we go higher from here, break past this previous little high we had here, and start making more upward movement? Time will tell. You can see that the 50-day is still working its way towards the 200, but the slope is going in the right direction. And I think other than that, let's take a look at the weekly. Big thing on the weekly that I wanted to kind of mention was that we actually had an inside week. So you can see the highs and the lows, inside of the highs and lows of the previous week, and then same an inside week on the week prior to that. So it's really going to be interesting to see at what point we break, whether it's up or down. It's just one of those where it's going to be, time's going to tell. There's really no way of truly knowing. Other big thing, we were lighter on volume this week than last week, and last week lighter on volume than the prior week. So volume definitely seems to be slowly drying up as we make this pullback, which is also another positive sign for the bulls. Other than that, though, key levels are really going to keep remaining the same. I'll zoom out so you can see those a little bit better, but the 12,000 range seems to be an area where we've met a lot of resistance up into also, which we've talked about, the June 2nd, 2021, that peak that we reached there. You can see the resistance being met. So on the upside there, want to see us break higher. On the downside, I think the most important really is the 200-day simple moving average. I would also say let's keep a look at the low from February 10th, because we did not break that low on the NASDAQ. So if we can maintain above that low, that's a very, very positive sign. If we do break below it, not the biggest concern. I think on the downside, maintaining above the 200's the biggest concern that I have. We are still, and I didn't get to mention this before, but we are still in a power trend, which is a positive sign as well. So let's jump over to the S&P. You can see the S&P did intraday break below the 21-day, but closed, like we said, just at it. But the big thing for me is that February 10th day, we actually broke below that intraday too, which is not a positive sign. But again, seems like we're just continuing this pullback, which is healthy because we did have on both the NASDAQ and the S&P a very, very rapid rise. So having a pullback, it's just healthy market movement. If we continue to just keep rocketing higher and higher, you got to know that at some point there's going to be some sort of a pullback. So we'll see. Is this going to maintain its kind of slow pullback, and can we rocket higher, or are we going to start breaking down again and possibly this just be another rejected rally back into the downward trend? I'll show you the guys the weekly. You can see that right there. And in terms of key levels, really same stuff. Maintain above. Here I would say maintain above the 50. You could also use the 200. And then on the upside, it's that June 2nd. That June 2nd high. And I would even say you could also take a look at the February 2nd high, because we did intraday break above that. But yeah, other than that, that's all we got on the indexes. So next up, we got industry groups. So let's talk about the top 10 weekly performers, bottom 10 weekly performers, the jumps in the rankings, and then we'll go through the top 20 industry groups. So top 10 weekly performers. The big standouts here is you're really starting to see some of that tech come in there. Computer software specialty enterprises, a lot of those groups starting to perform well. But other than that, nothing really much else for me to add. Bottom 10 weekly performers, oil and gas. Right there, this has been one of those groups that was leading for a long, long time. We're starting to see them get hit, starting to see them fall through the rankings, and this screen really, really shows that. Biggest weekly rank jumps, again, seeing more and more strength within the tech, computer software database, computer software specialty enterprise, computer software enterprise, TCOM also popping its way in there. Excuse me. So starting to see more of those NASDAQ type companies performing and jumping up in the rankings, which makes sense because, as we've seen, the NASDAQ is performing the best of all indexes. Biggest weekly rank falls, same trend, oil and gas dropping, which we just talked about. All right, so here we have the top 20 through 11 groups. Yeah, nothing really to add here. I'm not going to spend much time on this. You guys can see them on the screen. You can do a little further investigation. But let's jump over into the top 10 industry groups. And as we do every week, we'll be showing the Campos composite stocks, which is the criteria I have on the screen. So you guys can possibly build a watch list with these top 10 groups. Here again, I'm not going to waste too much time. I'm going to try to get through these a little faster than we normally do and just talk about really some of the key points. On the screen, you'll see all the data. Feel free to pause the screen to take a little more of an in-depth look at the data. I'm just going to be talking about what I'm seeing and trying to add some comments to what's on the screen. So let's jump over to MarketSmith. All right, so let's get started with number 10, machinery, construction, and mining. Oops, I didn't switch that over for you guys. Here's your data, everything on the screen. And then you have your top stocks. This is one of those groups There is, I guess, some actionable stuff in there. We have seen some consistent strength there. Caterpillar is one of those stocks that I've had on my watch list, so definitely worth paying attention to. All right, next up, we got leisure and gaming, number 11 to number 9. You can see that. And then here you have some of the stocks, another group that's been up here for a pretty long time. After that, we got metal, mining, and ores. So this group, 12 to 8 jumping into the top 10. Definitely interesting to see that, but still floating below its 10 to its 21-day moving average. I thought that was pretty interesting. So this has been a group that we've seen popping in and out of the top 10 for a while now. And then there you have some of the stocks in that group. All right, next up, number 7, retail department stores. See that on your screen. And that was a big drop down from 3 to 7. So one of those groups that we're starting to see those rotations starting to possibly make its way out of the top 10. So be conscious of that. And one stock, Dillard's on that. Number 6, leisure, movies, and related. Just kind of floating around. And no stocks to mention there. Number 5, steel producers. This is definitely a group that I've seen a good amount of stocks popping up. So one to definitely be conscious of. And it moved up from 8 to 5. So seeing the movement up shows you that it's got growing in relative strength. And when we have this time where we're seeing a lot of rotation, I think it's important to not just look at who's in the top 10, but how they're shifting. So a stock that's starting to move its way up into the top 10 is something you want to be paying attention to versus the last group going down. Maybe you kind of pay less attention to a group like that. And 2 stocks in that group. All right, number 4, we have... Oh, did I mess up? Yes, I did. Okay, there we go. Number 4 is commercial services leasing. You guys can see that on your screen. And they have your stocks there. Number 3, there you have metal producers, distributors, jumping from 4 to 3. Clearly, we're seeing a little bit of a trend within the steel, metal, things like that. And pretty big move, up 5.60 for the week. One stock to mention there. Number 2, retail, wholesale, office supplies. This is 2 last week, really pretty much flat, just like the RS line, and no stocks to mention there. And the other thing I want to mention is that group does not have a lot of stocks in there. And then here you have number 1, oil and gas field services. This has been number 1 for a little bit, but you can see starting to trend downward as the RS line starting to trend downward as well. So something to be conscious of. But the big thing I do want to mention when it comes to the industry groups is really paying attention sometimes to the stocks that are in these groups. Actually, I didn't show you. You guys have the stocks in the number 1 group. Sorry about that. But it's also important to really pay attention to some of these groups that have like 1 or 2 stocks in there. It's just not, I don't put much weight into that as a leading group. It's not a big or broad move. And that's what we're looking for with the industry groups, is to see an entire group moving together and showing strength. Because as a group moves together, you got a higher probability that a stock that you're picking in that group is going to follow the trend of that group and the trend of the market, and your probability of success rate is higher. So be conscious of those. A lot of those groups are just, that's why I kind of went through it quickly, not really worth paying too much attention to. Here we have our earnings up on the screen. Feel free to take a screenshot of that, see if you have any stocks that we're reporting. Very, very important to be conscious of. And yeah, other than that, let's get into the stance on the market. As I said, this is our 0 through 10 rating on the market. So I do this every single week. Last week, I was sitting at a 7.2. This week, my score, 7.1. Dropping down a measly 0.1 points. So I always like to go through the good and the bad. For the good, number 1, the index, just the overall index, price action, volume action, the health of those to me is doing fairly well. Like I said, we've had this rapid run up. To see a mild pullback, not that big a deal. In fact, very healthy if we're going to be going up for a longer term. The power trend's still intact. Another big positive thing. Strength in tech, especially for your growth stock traders. Having that strength in tech is a very, very positive sign. Semiconductors, which we talked a lot about last week, there's been a lot more breakouts, a lot more stocks perking up in there. We're seeing semiconductors moving its way through the rankings. I probably should have mentioned that because it didn't show up in the industry groups, but we talked about it last week. Very, very positive to see a group like that doing well. And some of these breakouts are also working. If you've been buying some of these stronger growth stocks, I'm sure you've seen 10, 20, even more, percent gains in some of those stocks. And hopefully you've been able to capitalize on those movements. So those are the good things. What about the concerns, the bad things? Look, there's still really no clear leadership. Like we mentioned with the semiconductors making its way up, that's good, but it's not clear that that could be the leading stock in a longer-term uptrend, leading stocks in a longer-term uptrend. You can see there's just a lot of shifting going on. So not really a bad thing, just more of something to be conscious of, that there's not that clear leadership yet. Key levels are showing resistance. We still haven't got above those levels we talked about specifically. To me, I'm really looking at that June 2nd high. Until we get above that, I'm going to be a little bit more cautious just because of how much resistance we've seen there. If we break above that, that's going to be a very positive sign. Just technically, it's going to mean that we have the probability of going higher being much more likely. So look, just be patient, be smart, think risk first, and just take it day by day. Again, this could be a long-term uptrend. If it is, though, we're very early on. This could also have been a bear rally, and we could be going back down. So nobody really truly knows. Just be patient. There's no reason to be all one way or the other in a market like this, because it could just be also a time where we go flat for a while. This is part of the market, and this is kind of how things act every now and then. So you just got to be patient. Well, throw your comments down below if you have anything that you want to add in terms of how you feel, maybe something I missed, maybe something you don't agree with. But other than that, that is all we have for this week. Appreciate you joining us. As always, click back down there if you made it this far. Subscribe. Do this every single week. The top right-hand corner, we got a chart breakdown, stock that we were looking at in the semiconductor space. And then in the bottom right-hand corner, the first time we're going into a discussion topic. So check that out. Hope you guys enjoy it. That's all we got for this week. Stay disciplined.